Good morning, everybody. Today is Monday, June 1st. What's going on, QOL traders? Welcome back. Welcome to June. I would say that I would be kind of cautious in June right now. I think there's going to be a little volatility, but before we get into that stuff, I've got in the chat here. If you want to join the Discord, just there's a link right there to give you nice, easy access to join our community. And then so you cannot miss any kind of updates from time to time. We're looking at some pretty decent levels today. I would say you know we're definitely exploring these all-time highs that have been happening here, and it's uncharted territory. So we have to kind of watch ourselves up here. But one thing I will say, it has been extremely relentless since end of March. So I would say everybody is saying, "Oh, waiting for a pullback, waiting for a pullback." Well, they're sitting on the sidelines right now, waiting for that pullback. I think it'll come. I just nobody knows when though. So let's take a look. Start off with the VIX. Again, if you're new to the channel, subscribe to the channel. Hit that thumbs up button. Like this video. Never miss a video or an update by subscribing to the channel. Hit that bell over there. Hit that thumbs up button. Also, down in the description, you can come and join our Discord community. And by hitting the link down below, I also put it in the chat there too. So VIX, little gap up here right now. So I would say not surprising. It's been pulling back very nicely below the 20-day moving average of 1725. I'd like to, I want it to be below this $15.74, but we're gapping up right now. I'm not sure what kind of news is happening out there. Our current administration says that we're close to a deal with Iran, but that's definitely going to be the focus. Whether that happens or not. Congress is back in session this week. And what does that mean? That means that there's, between the Senate and Congress, there's over 500 congressmen and congresspeople and Senate people part of the Senate that want to grab the mic and be a headline for some news. So I would expect some volatility, and especially you've got the midterms coming up. So big focus on everything with gas prices and everybody trying to bash the other side. So I personally hate this time of year. I can't stand politics. But nonetheless, it does impact our financials. So we do have a little gap up here right now. So I would not be surprised if we get a pullback into this $15.32 area. And then maybe get a little support and then pop to the upside. That's on the VIX. The VIX down here, we want the VIX to be nice and calm, right? That means that the volatility is taken out of the marketplace. It's kind of a fear factor type thing. So let's take a look at Brent crude. Actually, let's take a look at just WTI right now, which is impacts us here in the United States. Little tiny gap up here. We are below $100 a barrel, which is nice. I'd like to see us get down to this $83.67 a barrel, which is a 100-day moving average. But I do like us as long as we're below this 92.41. At some point, that will start impacting us positively in our pocketbook with filling up our cars here in the United States. As far as Brent is concerned, I'm pretty sure I got this up here somewhere. There it is. Brent, same thing, below $100 a barrel. This is impacting. This is the petroleum that needs to have a little more refinery. It's more expensive. Because it has to be refined a little more, whereas Brent crude from the United States is pretty much pull and put right into the pumps, right? There is a little bit of tender loving cure that's needed, but aside from that, it's not horrible. Bunch of gaps up here. I would say you could probably pop up to this $99.15 on the oil. You do have a gap down at $103.58 from 2 Fridays ago, right? So it was a week ago Friday. That's about the only other gap down that I see, and it kind of hovers right at the 20 and the 50-day moving average below that. So sitting below $100 a barrel, I don't think that's going to be earth shattering. I think that's actually going to be good for equities. So let's get into the ES right now and start moving along. All-time highs, people. Keep making them, right? There's nothing you can say about it that's other than it's just absolutely relentless. So let me get over here. Let's get a different view of this. Let's go to the 4 hour. Yeah, all-time highs, people. I would say 77.59.35 may be your line in the sand there to get a little resistance if we pop up and hit that level there. So you guys can see right here, this is from March 30th, and it's 63.53, and now we are at 76.23. Pretty much like a $1,300 move, which is pretty incredible. And you can just see it's just been very relentless and no pullback. So I would say, you know, with this type of market push, you are looking for pullback longs, right? So you have to take a look at these levels. Previous all-time highs are good pullback longs there. I would say if we lose this 75.70, 75 on the downside, I think 75.24 could happen pretty quickly, right? You know, big push here upside. I consider this a pretty big speed zone right here. And also, too, you have a little gap up here that didn't quite get filled. So I think maybe 74.85 would be a decent pullback level. You know, so if there's some kind of news that comes out, I think you're going to lose these levels really quickly. So be cautious. Be cautious on your pullbacks. Don't think that just because the market pulls back, oh, this is a great level to get long. I think that the market needs to pull back, and it needs to do a significant pullback. So don't just think like, oh, I'm just going to wait for a pullback and I'm going to get long. You have to watch the price action before you start diving into this, especially when we're at all-time highs right now, right? So let's get into the SPY. SPY, same thing, gap up here, big gap up. So not surprised if we pull back into the 75.63 level or the 754 level. And then let's get over here again. Let's go to the 4 hour. I actually like a pullback all the way back down here to the 708 level. You can see that everything is pushing up higher right here. This is a huge speed zone here, people. This is a 4 hour chart we're looking at. If you lose this 754, 749.53, to me seems like a no-brainer. And then if you lose that, you're going to come down to these 743 and 740 levels for some support, for some initial support right there, right? You know, this is a break and retest of a high, not a bad level. However, like I said, I think everything is pretty stretched out here since March 30th. You could just see this. The market's just, it's screaming pullback, right? And actually, this would be the ideal pullback to pull down to the 700 level. You could see where all of this was resistance up here. You had a little resistance right here at this 648 level. And then the 700 level, you saw, boom, tried popping through. And that would be an ideal pullback, right? Pulling back to 700. I'd like that level as a pullback, right? So, to me right now, even though we are trending higher right now, I'd still be a little cautious on getting long too quickly. Just be patient. It will happen, and you'll get your opportunity, right? Just don't be so eager to click the button and thinking that you're missing the only rally that ever happened here, right? NASDAQ, same thing on the NASDAQ. Let's start out with the 4 hour. 4 hour, same thing. Really incredible moves here. All-time highs, 30,595.25. I liked it. I don't mind this pullback here. Let me get rid of this one. Pull that, remove that, clean that up a little bit. I don't mind this 29,735 level. Pretty good. Here's a high. I rejected the high here, and then you can see it came back and supported that. But the same thing, like I said, on the ES. Big speed zones here. If we lose, I'm going to say this level right here. If we lose this 30,270 level, actually, I am not even sure I like this. I mean, you could leave this level up here, but to me, there's a lot of gap. There's a lot of gap down here to be filled, right? This is a pretty good level to pull back to. 29,735 or 29,737.25. Decent level to pull back right here. You can see this is the area right here. Here's a high, rejected the high, broke through it. Support. Beautiful level right here. Again, though, if you lose that level, you're coming down to some previously open point of control. So we have 29,260.90. On the upside right now, we have some resistance coming into play. I would say if you get up into this 31,146, 31,212, it's 127% Fibonacci extension. You'll probably get a little resistance up at that level right there. So let's get over to the Qs, then we can move on. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button and like this video. Gap up from yesterday, that's filled right now. You can see right here, this is a gap up, boom, filled, easy. You should be able to look at these charts, people. I do this every day. It's rinse and repeat. Do the same thing every single day. Same thing, I would say if we lose the low from Friday, you're going to quickly pull back to at least 729.41. Speed zone right here. Why is it a speed zone? Because it's pretty much one directional without any resistance going back and forth. So, watch this level right here, 735.25. If we lose that, 729.41 is a level that I think that we come into, which is actually a previous point of control. And then we have a previous all-time high at 722.03, which is not a bad level to pull back to. Every time you're going to look at your support and resistance levels, very important that you start out very, a big holistic view of things, right? So right here, this is our March 30th level low, and it's been straight up. So this is a great point, to start. If you want to do like a Fibonacci level, you start right, at the low. Actually, you go to the high and you pull back down to the low, and that'll give you your Fibonacci levels right here. So here's the level that I really like. You can see it's coming right here in the 20-day moving average. So the 707.85 level is a great pullback level. If we get that level, I like that, right? So let's get to the 15. Clean it up for us a little bit, right? So you can see it comes right here. I've got a high end of the regressional trend line here from April 5th of 2025. And then you've got a point of control at 710 and change. And then the 20-day moving average sitting at 709.04. This is a beautiful area for a pullback here, right? So for more, all your long-termers, right? Now let's get into Tesla here. So again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. What we do and what we teach in our Discord community is day trading. So I have several accounts that I trade on during the day, and they are 100% cash at the end of every single day. I've got my long-term accounts. I set it and forget it. I don't touch those. But what we are teaching here, we're teaching people how to day trade. And now with this new the pattern day trading balance requirement being lifted, there's going to be a lot more retail traders that are going to need help. I don't care what you think. I've been trading since 1995. Okay, so you're going to need help because every day I'm always learning. So if I am always learning, I guarantee you're going to need to learn as well. So come to the Discord channel and you could see our live trading that we do, and we trade options. And again, like I said, it's 100%. It's a scalping strategy and in and out of the markets, and then 100% cash at the end of every day. Okay. Looking at these levels right now, you can see it's going to be very volatile, very wicky. We had, right here, you had your 444.62 resistance. You could see that knocked it down, pretty significantly once it got back up there. So when I was talking about speed zones go both directions, right? They can go, if you have a quick direction down, it's going to it's going to retrace it on the upside. Okay. So right now I could just see what's happening here in Tesla. You're going to have to be careful today. You can see there could be, when I start seeing these flash wicks all over the place, I want to be concerned. I want to see how Tesla starts to trade during the day. You don't want to see a lot of wickiness, right? Like, so here Friday, big wicks on Friday. And, when you have those big wicks, especially if you're trading options, it depletes your premium. Your premiums go out of whack. You want to see something nice and confirmed, nice and slow movement. Like, this isn't bad, even though this is after hours. Something like this, right? You don't want to see a big wick like that. But anyways, going over what we have, biggest level we have today is 425.95. Need to hold that. It's a week ago Friday's close. So if we lose that, you've got the 20-day here at 421.39. And then if we lose that level, I actually like a pullback level down into this 414.50 level. So watch your low here from Friday. You have a pretty decent range. Your high from Friday was 441 and your low was 428. So big range there on Friday. I would say if you lose the 428, you've got this 425.95, which you see we already held it one time on last Tuesday. So be careful again. Don't just all of a sudden, if the market pulls back to this 425.95, Jeff said, oh, that's a good level to buy. No, you have to see the way the market reacts here. But I will say, if we lose that level, you can see right here, I don't see a lot of support here. Anything right here This is post-market, not a lot of volume. And right here, this is post-market as well. Not a lot of volume here as well. So big level, 425.95. Need to hold that level. If you lose it, you do have the 20-day at 421.39. I do, you have the 20-day exponential moving average just below that too. If you do lose that, though, I would say there's some decent levels down here. Like I said, the 414.50 is a decent level. It also comes in with a regressional trend line that I drew here since I drew it last night on from April, right? So what I did was I came over here, I looked at my 4-hour, and you see how this trend line, I know it looks a little noisy right now. Let me see if I can clean this up, but maybe this will be a little better for you. Go default. Okay. So you can see how this is trending down, right? So I could draw a regressional trend line from here. I could just take it to the high point and draw it right down there, right? And I can keep moving here. And then, boom, it gives me my regressional trend line. Well, now you can see the trend is actually moving up. So now what I'll do is I could take the low here, and I could draw a trend line here. And this gives me my trend line moving up. And so now it'll give me my areas of where I could see that there could be some support. And this 413 level, like I was saying, it's 414. This is actually a pretty decent level, right? So you can see a low right here. You see it comes right in on a lower end regressional trend line. And these trend lines, they hit 3 times. They typically like to hit 3 times, right? You can just see here's one time here. Here's a second time here. So I'd like to see, let's get another pop up here, and that'll be in the 470 level at some point, right? We do have open point of controls, right? So our point of controls, we still have one up here at 455.12, did not get hit. We have a 478.39 level, did not get hit from from December of last year. And then unfortunately, people, we still have this open point of control at 334.07. That's been open since September 4th of last year. Didn't get down here. I wanted it to fill us here on April 7th. Did not get there. So we're gonna have to watch our levels and just watch the price action. And what I mean by price action, the more time you spend at the computer, you'll understand price action. It's just like anything. If you want to be good at a sport, you'll go out there and you'll practice a million times. And to be good at trading, you have to have computer time. You have to be in front of the computer. You have to see how the markets respond, and every equity responds differently, right? So I always use the 15-minute chart. By the way, the 15-minute chart is the best chart to give you the most accurate data versus like a 1-minute chart, right? You don't want to have a 1-minute chart because a 1-minute chart, there's not enough data on a 1-minute chart. So let me fix these things here first. Apply, okay. So here are our point of controls for today. Like I said, I don't see anything supporting us down here if we lose this Friday's close. So you have to be careful about that. So let's get over, before we move on to what we're going to trade for today, I wanted to go over the new indicator, and this new indicator is working fantastic. So on Friday, these were all 1-minute charts we're looking at, and they're Mag 7. You have Tesla, you have NVIDIA, Apple, Meta, Google, Amazon, and Microsoft. So going through it really quickly, we have our range here, all on the 1-minute range, and the win rate is between 90 and 96% on the 1-minute chart. What does that mean? That means that these price targets are being hit between 90 and 96% of the days. Okay, so now your job after understanding that is to read price action and understand where you're going to take your trade. Here is the range of the 1 minute. When you break one direction, you want to take your trade going in that direction. It doesn't necessarily mean just because it breaks it, it's going to hit this price target. You have to. That's where your discretionary is going to come in. You could just make your trades and just let it sit and let it fly and make sure your stops are in proper place. This indicator that I've created can be autonomous, but right now I still manage my trades, and even though we're in beta testing with this right now, I still I utilize this anyways because it's all part of my trade strategy, and it just takes away the discretionary out of my trades. Why? Because it is basically telling me, okay, here you can get a short, It'll tell you to exit your signal when it's going the other way, and just because it tells you to exit your signal doesn't mean that this trade wouldn't have worked out, right? Because you could see right here, it said to get into your trade right here, and then this yellow square tells you get out of your trade, exit it, right? And then right here, it tells you to re-enter it again. And if you re-entered it again, you would have been very successful on that trade right there. So I just want to go over this. This indicator will probably be, we're getting ready to market this probably by the end of the month. It'll be ready to go. I'm just working out some finer details. And then, but just to go over the win rate on the rest of the Mag 7s, it doesn't hit on all of them, but they're still, the win rates are still in the 90% on all of them. But it doesn't do it every day. But you can see right here, here's NVIDIA. When you break the range, this solid blue is your first price target on the upside. Your purple is the first price target on the downside. Your 90 to 96% win rate means that it's going to hit at least the first price target. A lot of times it'll hit both, and then sometimes it hits both on both sides. Sometimes it'll hit both price targets on the downside, and by the end of the day, it pops up here. But you can see NVIDIA was pretty strong on Friday. Let's just keep moving along. I think Apple did not hit their price targets. However, it's still giving you your signals. It's telling you when to get in and get out of these trades. I know this looks very noisy to you right now. I've been working on this for a very long time, and there's no way I'm going to be able to teach it to you in 2 minutes. That's why right now I'm just trying to show you the basics of what it, when the markets are open. None of this is written. I didn't come here after the market and write any of this stuff. This stuff is generated as the market is moving and as price action happens. It's giving you signals, and it's giving you indicators when to get in, when to get out, and then you have to make your own discretionary decisions from there, right? So you can see we didn't quite hit that take profit on the downside, but that's okay. It still tells you, okay, well, the trade's not working out. So that was Apple. Apple did not hit. Meta, I believe Meta hit pretty significant. Yep. Meta hit within the first 2 minutes of the day. Your day is done, people. And when you can apply this to options, you can make a lot of money. So not only did Meta hit the first price target within the first minute, it hit the second price target within 8 minutes after the market was open. Okay, I'm going to start flying by. Really good results on that. Google, let's take a look at Google. Google, very struggle of a day. Google, however, it did hit both price targets, but you would have been sitting around on a Friday, of which that's not what I would do. Anyways, let's move on. Amazon, I'm not sure if Amazon hit. I think Amazon was another one that did not hit. But that being said, it's giving you your signals. It's giving you that yellow square telling you to get out of your trades. And then, once you get back into the range, it's a chop fest and to move on. So if you are one that likes to trade a lot of different stocks, this is the ideal indicator for you, because you can just trade the Mag 7 and you're going to make you have the ability, I'm not going to tell you for sure, to make a lot of money, right? There's days where I'm messing up these trades and I go back and look at the day. I'm like, how did I miss this, right? So here is the last one. This is Microsoft. Boom, no problem. Hit the first price target 6 minutes after the market opened. Hit the second price target here. What time did that hit? 9:06, 36 minutes into the market. Your day is done on a Friday. Go and enjoy yourself. Quality of life. QOL Trading, that's what we stand for, right? We don't want to be sitting by the computer, people. We want to enjoy our life. So what am I going to do for today? For today, I am going to have today's expiration date and 435 calls we're going to start with right now. I may adjust that as the market pulls back. And I had the 425 puts. You can see where they closed here. Here's the premium price where the puts closed. They're going to open up now because we're opening up right now about $6 lower. These will be in the high twos, maybe in the low $3 premiums. And as far as the calls here, they close at $4.75. These will probably be in the high twos as well, because this is a 435 call. They're expiring today. So I'm going to start off the morning trading today's expiration date, and I'm going to see how these premiums respond. If these premiums get too out of whack, then I'll probably just switch to a Wednesday's expiration date. So if you are aware, since January 26th, they now had 3 expiration dates for the week. Before, they only had weeklies on Fridays. So it definitely creates a little more action, but definitely a little more volatility to be trading zero DTs. I usually do not like trading zero DTs, because if you have a bad trade, you don't have a lot of time. Your time decay is going to deplete your premium price. Whereas if I was trading Friday's expiration date and I had a bad trade, I'd have time to sit back and not necessarily sit back with my feet up, but sit back and work my way out of a trade, or just get out of the trade. Whereas when you're trading zero DTs, these premium prices are going to be moving along pretty quickly, right? So you got to be careful. Make sure you have the appropriate lot size for your balance of your account. But anyways, that getting back to what Tesla did on Friday, you can see right here. here is the 5. This is my old script that I had. I still keep it up on my screen, but you can see this generates my 5-minute opening range, and it was all predicated. All the trades were based off the 5-minute opening range. You could see it was a beautiful break. Once you broke that 5-minute at about 9:05 on Friday, you had a nice break. 436. Could have gotten yourself about an $8 move, right? $8 move at, in 35 minutes. Fantastic. Beautiful. So anyways, come on down, join the Discord community so you can see this trading live. I'll answer any questions. And also, if there's things you need help with, drop a note in the comment area or come into the Discord channel. So when you join the Discord channel, the channel is free. If you want to come into the trade desk, there is a 1-day free entrance for that. And then after that, there's a fee for being in the trade desk. And we do the trading from 9:30 a.m. to 11 a.m. Eastern time every day. So hope to see you in there. And then also stay in. Keep your ears open for this indicator that we are going to start marketing. I'm hoping to get this thing marketed by the middle of June, the latest by the end of June. So anyways, keep your trades small, and I will